Luck is never random in trading. It's simply preparation meeting opportunity. Hello, traders. Welcome back to Your Nifty Guy. Today, I'll take you through the Nifty setup for tomorrow, the crucial levels, and my trade plan so you can trade with clarity and confidence. If you find value, make sure to like the video, share it with your trading friends or communities that you might be a part of, subscribe to the channel, and drop your thoughts in the comments below. I have been getting a few DMs with regards to making the videos in Hindi. Uh, आई एम गुड विथ हिंदी मेरी हिंदी भी काफी अच्छी है और मैं हिंदी में वीडियो बना सकता हूँ सो जस्ट लेट मी नो इन द कमेंट्स इफ इंग्लिश इज फाइन और शुड आई स्टिक टू हिंदी और मे बी अ मिक्स ऑफ हिंदी एंड इंग्लिश वुड बी fine and I'll try to incorporate that in the future videos. And on that note, we'll start with today's video. As usual, the video will be divided into two parts. First, we'll be discussing about what we had planned for today versus what happened in the markets. And then the second will be the plan of action for tomorrow. In today's video, we'll also learn how we have to modify the levels that we had planned for in the preparation for with accordance to what the price is doing in the live markets. Because today I did modify the level. I have actually shifted back the level to the one that we had planned earlier, but then I'll just come back to it. So markets opened with a gap up of around, I guess, 90 odd points, and then immediately went into a selling zone. Now, this particular fib level that we had drawn as a support, this was with regards to this particular high. I'll quickly redraw the levels, right? As you can see, this was the 0.5 to 0.618 zone of this low to this high. But at the opening, market created a new high. So in the live market, we should not be sticking around with these levels. We have to keep in mind, okay, that this was the level which was as per this particular price action, which was on the chart still yesterday. Today, the price action has changed. A new high has been created, and we need to modify our levels. So this level gets shifted, gets a little bigger for the day as soon as the new day high was created. Now, like I was telling you guys that we are expecting some sideways to volatile movement, and as you can see, uh, today's if we take first three candles high and low, yes, apart from this little outing over here and this little outing over here, the market was completely inside the first 15 minutes of time frame throughout the day. So this is what I had been telling you guys that okay, we are experiencing volatility. Now, volatility will definitely not at all means that we will be experiencing wild swings, but even this is a volatility wherein the market moves without a clear price action structure, and that is where it is most likely to take your SLs, be it long, be it short. So that is the reason why I always tell you guys to always focus on the market structure. First, give utmost importance to how what the market structure is doing, and then only plan for your trades. Now, there was only one single trade that I took today. That also I got out of it very quickly. Now, if you can clearly look from the day high, markets came down, gave a pullback, came down, and went up. Now, this is a clear double bottom. And why did I take this particular trade? For a very, very simple reason. Number one, we are above the support zone. It, like I have mentioned in the previous videos as well. Now, this is a high probability zone, and if prices would have hit this particular zone, the trade would have been much more high probable, but does not mean that the prices will have to take support or reverse from exactly from this point. Try to understand this particular top line is the zero point 0.5 level. This is the 0.618 level, but these are also important fib levels 0.382, 0.26.8, whatever it is. So again, the prices can reverse from here, and as long as we are above this particular level, we are not looking at creating any short entries like we had planned. We'll be creating a short entry only below the fib level, which was around here as per yesterday's price action. So this was a clear double bottom. What we need for a double bottom is a downward move. First pullback, we do not buy into the first pullback. We wait for the market to come down again. Second round of selling. And then once the high of this particular thing is taken out, that is where we enter here. And this is exactly why I entered at the break of this particular candle. It was a scalping trade. I got out as per my rules on the 10:10 a.m. candle itself because this candle followed all three rules of the scalping trades that I use, which is high which is lower than the previous high, low which is lower than previous low, and the candle also closed below the previous low. Now the market did ultimately go up again and making a new high, which was again almost the day high again. But I do not have the FOMO of this particular missing out of this particular move. Try to understand market will move a lot in an entire day, right? It has moved from here to here. But if I'm able to capture just this part, right? So I'll give you a rough example from this particular low to this particular high. Markets roughly gave a momentum of around 90 odd points. What did I capture in this momentum? I captured 28, 28, 29 points, right? As per Nifty Spot. On premium, it is entirely different. On premium, I captured only around 20 odd points because the VIX was down today and there was not great of a much of a momentum in the option prices. So the whole point to say is if you keep on thinking, okay, market has given a this move of 90 points, but I have only captured 20, 30 odd points. Is it good enough? Am I good enough a trader? Will I be surviving in the long run? Well, market will move a lot, and you all you need to do is be in the right direction based on your set of rules and capture a part of this, capture a small part of that entire big movement. And if you do it consistently over and over again, trust me, you will make it in the bigger run. And if you keep on coming over the part that, okay, I market moved this much, I only captured this much, maybe I'm not right, maybe I should have held it, but what if this would have reversed from here? That is the reason why following your rules is very, very important. And the ultimate thing which is there in trading, which you can do is to be disciplined. Post this again, as you can see, there was no clear, absolutely clear, no clear price action which was there. Again, like we could not take any short trades because we were above this particular level. Plus, the market again moved without any lack of a clear structure. It broke down below this particular swing. Again, it was a haphazard market price action. If you just see from here, I hope you're getting what I mean to say, and it is best to not getting trapped in such moves. Uh, as per the expiry trade, there was nothing much which happened around in the open interest today. You can go and watch that. I was also looking at it, observing it, although I was not too keen on taking a hero zero because the day had been quite a sideways day. And again, there was no major changes which is happening around. The major action was around 25,100, wherein in this particular move, there was the people who had exited, but then again, the positions got built up as soon as this move came in. And then again, put writers were trapped and whatever. So call writers were trapped again here who had increased their positions once the market was going down below this, below 25,100. So this was the only action which was observed, but nothing significant to actually take a hero zero trade based on the setup that we use. All right. Now for tomorrow, deleting this. We'll be deleting this zone as well. I will suggest you guys to keep your positions very, very light for a couple of more days. Let there be clarity in the market. Now, the way markets have actually recovered from the bottom. So, like I was saying in the weekly charts, so this was the six straight weeks of negative price action on Nifty. And in just 2 weeks, we have managed to recover about 50, the golden zone of fib retracement, which is there. So maybe if we are to take a resistance from here, tomorrow's closing will decide that. And then post the pullback, are we again going down? Are we again going up? That is something we will not be predicting. We'll let the markets decide. So this is the weekly fib resistance, which is there. But it is commendable how the market has actually given us this such a good move with this particular breakaway gap, which is there created on the chart, and markets have respected that, and the gap has not been filled yet. But then we'll not be predicting anything. Like I said, we will be prepared for anything. So this particular zone is very, very close to this particular high of the fifth zone. So we will be taking a long entry only above, not only above this, but above this particular swing high, or the level high, which is the 0.618 zone of the weekly fib level. So say, but markets are still a long distance around here. What we need is a gap up opening and then markets breaking out and then giving us a pullback for this trade to trigger. If we get a little flattish opening and then the market breaks down below today's low, we can look for a short entry. What markets can also do is, today was again expiry, and it was a sideways expiry just like last time. Although it was a sideways day, that is the reason I'm not asking you guys to take uh, any trade based on the wrap setup. But in case you see that the markets open flat or with a gap down, because we have closed down near the day's low, and then this we go back, we go down below today's low, and then the high of this candle gets taken out. Right, try to understand this setup will be a low probable move, because for this particular setup what we need actually is a trending day, wherein people will feel obliged to enter into the market as soon as the day low is breaking, and that is what we need: fresh people entering the market and then their stop losses being triggered. But nonetheless, we are in a positive uptrend and people can get trapped around previous day's low, and that is the reason I'll just ask you guys to keep this particular setup in mind. Otherwise, uh, I would suggest not to take any trades in between this particular zone, which is there. I'll quickly have a look at the higher time frame as well. Okay, I'll quickly take a fib level based on the 4 hour chart as well. Okay, sorry. And then we'll come back to the shorter time frame. So yes, any short trade that we are taking around here, we should be careful with the price action around here. Any positive price action around these levels, we can look for a long entry. Needless to say, below this, we are looking for a short entry only. This should be a entire no trading zone for you guys. This entire zone should be absolutely no trading, right? So that's it for today's plan. Remember, in trading, discipline always beats excitement. Stay sharp, trade with a plan, and never gamble with your capital. If this video helped you, hit like, share it with your trading partners, subscribe to Your Nifty Guy, and let me know your views in the comments. See you in the next one. Trade safe, trade smart. Thanks for tuning in. Cheers.